Right now, on the surface, they may seem to be disconnected issues. The Iranian government seeking the ability to move toward weaponizing nuclear power, and that black gold underneath the sands in the Middle East and even here in North America. But put them together and they could mean even cheaper oil and a world more awash in the stuff than anyone could ever imagine. Haven't we been saying that, though, for the last couple of months? Let's deal with the reality, then. Welcome back from the Society to Advance Financial Education, and one of the real money masters, Steve Beaman, joins us. Good to see you again, Steve.
Oh, it's always nice to be with you, Ed, and enlighten people about the truth around the world.
Okay, here we go with the truth, and I'm looking. Here's the New York Times. U.S. oil prices fall to 6-year low. The Wall Street Journal, OPEC warns U.S. oil boom could be over by year end. Wall Street Journal, Iran's nuclear deal could open oil flood. My God, Steve, why don't we just start swimming in this stuff?
Well, we are swimming in it. This situation with Iran, very simply, as you know, is they want to put nuclear weapons on the agenda. They want those things, but they're willing to sacrifice maybe in the short term to say, we'll hold off, but let us go sell our oil in the open marketplaces. Iran used to do about 6 million barrels a day in the pre-Ayatollah days. After that, they're much less efficient. They do a total of a couple of million barrels a day. They're now asking for permission to export up to 1 million barrels a day, specifically to the Far East and China. And that's a lot of cash for those Ayatollahs to use in weapons development or anything else.
If indeed the world is awash in oil as we talk about, and now they're talking about 500,000 barrels or more going out. And again, here's what the general person is going to hear. If we've got so much oil, why does it then behoove them to put more oil out there, and how can they make money on it when actually the price of oil is dropping?
Well, let's keep in mind, whenever you're playing geopolitical games like this, self-interest comes to bear. And Iran right now is out for Iran. They don't really care about OPEC. They don't care about other oil producers. They're worried about shale oil. But this move by them actually hurts the shale industry because it puts prices below that at which shale oil can be produced profitably. So they're taking a gamble here that they'll flood more on the market, prices will come down, shale oil will stop being produced, so it will balance out.
Why would people want to buy from Iran if not from somebody else? Would Iran simply then at that point just start undercutting people on the prices?
Well, clearly they'll do that, but we also have to recognize that China has a stake in a lot of these discussions going on. And it's the enemy of my enemy is my friend. And China may be looking at this saying, we'll support Iran because we're not really that pro-America. And this is specifically aimed at, the American treaty negotiations that are going on right now.
Would you expect, though, that when it comes down to the whole oil issue itself, that apparently we're hearing today that the Iranians say they've got about 90% of a deal already set with America, and of course they're not saying what the other 10% is, we probably can guess. But if you were to look at it, that this is going to happen, because if they do cut a deal, this definitely seems to be part of it, and Iran will be able to sell their oil on the market again, correct?
Oh, there's no question. This is a big part of the thing, is to reduce these sanctions that prevent them from selling the oil. And that's why you're seeing the markets react very skittish around this. Further prices or declining oil prices tend to be bad for the markets because it means that sector is going to come down further. The markets don't want to see that, so they're skittish, and we saw a big sell-off today taking place largely because of that.
But let's look at this honestly here. If indeed these sanctions are lifted, it's not as if you're all of a sudden going to find 500 million barrels out on the market right away. Isn't this going to basically take steps and time in order to get to a certain point?
Well, they've got the infrastructure. They can turn on these spigots relatively quickly. But let's not forget, and people need to know this, the markets operate in the future. They don't operate on today. So if the markets see them putting another 1 million barrels a day out there, it will react today on that news rather than wait for it actually to happen.
We are talking about, again, another low in oil prices. How low are we going to go, Steve, this time?
You and I have talked about this $40 range. We're at 46 now. I think we're probably going to stay there. I don't see anybody's interest being served taking it much further. But, if it really wants to, I guess it's good for the consumer. Can't argue with it.
I don't know about you, but I'm going to go home right away. I'm going to go call a pool company. I'm going to have a big pool. I'm going to have an in-ground pool built into the back of my house right now. I'm just going to fill it with oil. Why not, right?
Exactly, and we're all the Beverly Hillbillies now. We got oil coming out of our backyards.
See, we should have listened to a story about a man named Jed. See, we all would have been right at that point. Steve Beaman, the Society to Advance Financial Education. Let's continue to educate America and let them know what's coming up. Always a pleasure, Steve. Thanks so much for joining us.
Thank you. I'd have a wonderful day.
All right, buddy. You too. And a happy St. Paddy's Day. By the way, there will be no green oil coming out of the earth anywhere, at least not that we are aware of, okay? We'll deal with the realities of the Irish and St. Paddy's Day much later in the show. Coming up next, Spanning the Globe on MidPoint.